Hey, Shane.
Hey, Diana.
So the RBA raised rates for the first time in about 2 years this week. So the cash rate's gone from 3.6 to 3.85%. It was mostly expected by economists, but we actually thought that the RBA may hold, or they did concede it was a pretty close call. So why do you think we got it wrong?
We're using the wrong technique. We literally do need to get out there and use crystals and darts and things and astrology, maybe then we'll get it right. I wasn't surprised. I thought it.
No, neither was I.
Thought it was a bit of a toss-up. We were debating for the next few days after the CPI, and our initial inclination, that's your inclination, Mize and me, Booz, our colleague, was that they would hike. And then when we looked a bit more in the detail, we thought, well, there's a bit of a downtrend here. We have got a stronger Australian dollar. If the RBA factors in these higher rates that are coming through from the money market, then they could actually revise down their inflation forecasts, and concluded, well, maybe it's closer than we think, and therefore we thought, well, maybe they should wait another couple of months before moving if needed. But nevertheless, they've done it. I can understand why they did. I lived through the 70s into the 80s when inflation was high, and I saw the chaos that can create.
But inflation's not that high. On the trim mean, the latest number for December was 3.3% over the year. The monthly. The monthly.
And the quarterly. Now
the quarterly was 3.4%.
Numbers all over the place. Yeah, 3.4.
Either way, inflation's running at slightly over 3% on an annual basis. It's hardly like the pandemic rate, so we had 6-7% inflation, or like in the 70s. Yeah, or like in the 70s when it was much higher. Is the current pace of inflation really a problem?
I don't think it's a major problem, but if you're going to lock in, say, 3.5 rather than 2.5 long term, then the whole interest rate structure in the economy has to go up, and people will be paying higher mortgage rates for longer. And I think the RBA also worries that if we let a little bit of inflation get through and we're seen to be lax, then they fear that they will lose credibility in terms of their commitment to the inflation target, and therefore the 3.4 we have now for underlying, or 3.8 for the headline monthly, becomes something higher over time. That sort of thinking was around in the late 60s in the US and in Australia in the early 70s, when it gradually crept higher and higher. That's not a major problem. And then before you know it, keeps going higher, and then eventually we get to 17%. I think in 1974 in Australia and in the US, it might have been over 20% in the early 80s. So, and that's why central banks are now so scared of a slight rise.
And do you think that history around high inflation has made like the average economist concerned that even inflation at 3% is a problem? Because if you just read the media about what economists are saying, they're sort of all out there saying we've got a huge inflation problem and the RBA should of course be hiking rates and they've made the right decision, and this credibility argument. So is it just economists that are sort of so concerned about inflation and are so hawkish, talking up interest rates? If you sort of try and explain to the everyday person, why the RBA is raising rates when inflation is high, well, they could say, but the cost of living is such a problem for me, and now it's becoming worse because interest rates are going up.
Well, there's a whole bunch of things in there. It's not just economists. If I go on Twitter, the accusation against me from some, because most people don't reply, but a lot of them I've seen say, oh, you're too soft on inflation, you got it wrong. Of course they have to hike, what do you expect, blah, 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 that sort of stuff. And so there's a lot of people out there who sort of get that. I know some economists are a lot harder on this than others, so there's a whole spectrum there. But I think, they probably were influenced by the 70s and early 80s and the history books, and they would have seen what happens or read about what happens, and that therefore they're more committed to keeping inflation down, and a lot of central banks are as well. So there's always a danger that if we forget that history, then we let history repeat and inflation takes off. And you could argue there's an element of that in Trump's sort of thinking in the US. But you've only got to go to where I went to in November last year, to Turkey, October, November, and you see what happens when a government takes over the central bank. Effectively, they have 30% plus inflation, 30% plus mortgage rates. That becomes a total debacle. Great place to go, great place for a holiday, but do I want that sort of inflation? No way. Now, of course, you're going to say, well, 3.5 is not 30% is not the same
exactly
thing.
what I was going to say.
But you worry that once it gets out of the bottle, once the genie gets out of the bottle, then it will keep going, and then it will get harder to rein it back in again. And I could sort of understand where the RBA is coming from on that front. And I thought Governor Michelle Bullock explained it fairly well when one of the journalists in the press conference said, well, you're going to cause all this pain. It was something like this. You're going to cause all this pain for people with a mortgage. And her response was, well, if I don't get inflation under control, people will continue to feel pain. They say when I go into the supermarket, when I'm going about my life, paying for the essentials, I'm seeing higher prices, much higher than they were 5 years ago. And that's, in their view, and I tend to agree, that's the main thing causing the pain here.
But the problems in inflation are related more recently to more around administered and index price. I mean, we have a few charts on this. Inflation in those areas is running close to something like 6%, and in the market sector, it's actually running, around 2%, maybe slightly over. So it's still within the target range. Yeah. But will the rate hike actually even help with some of the administered price increases? So then what's the point of doing it?
That was one of the reasons why we erred on the side of staying on hold, waiting a little bit longer. I think the number is something like the chart you have is 6% administered, 6% inflation for administered and index prices. There's things like health, education, a whole bunch of things affected by government, local council rates and so on. And then it was about 2.9% for prices in the market sector of the economy, which is affected by interest rates. So obviously you raise interest rates, you probably affect prices in the market sector because higher rates, people spend less, less demand, companies can't put their prices up. So that bit goes down, but you've still got a problem in the administered prices. So I totally agree with that, which is why we concluded that there was an argument to hold. But having hiked, I guess I'm trying to explain why they've done that. And I can understand where they're coming from. I guess the other part, you raised the issue about, a lot of people would think if they got a mortgage, I've seen my cost of living go up, food, energy costs, insurance costing more. Now you're going to raise my mortgage rates. That just adds to the cost of living, surely. Well, for most people, yes, that might be the case. If you've got a mortgage, now obviously if you're not, you're relying on bank deposits, you'll actually get a benefit there. But the problem is that if you look back through history, inflation is a monetary phenomenon. There's too much money chasing too few goods. And one way to reduce the amount of money floating around is to raise interest rates. And that takes money away from people. They spend less and reduces demand in the economy and takes pressure off inflation. So that's the logic behind it. Question is, does it work? I reckon that 2022 to 23, 24 experience showed that it did work, that we raised interest rates in Australia. It caused pain and people cut back their spending. We had a per capita recession. So people did cut back.
Well, hopefully we don't get one of those this time, although that's unlikely because we've only had one rate hike. So probably going to see some softer growth in retail data maybe in the short term, but it's not going to cause significant downside pressure on the economy.
Yeah, I wouldn't think so. But it's still a risk. You can debate this in different ways. I mean, it's been put to me, well, the banks say that something like 95% of their customers did not cut their monthly mortgage payments despite the 3 rate cuts. So therefore, if you have one rate hike, their monthly mortgage payment probably stays the same because they never cut it in the first place. It'll just change the mix of interest and debt that they're paying each month.
But I guess it's the feel-good factor about how much is going towards paying down your principal and how much is going to interest.
That's right.
I mean, I don't know if most people would be looking at the details around that, but I certainly do. Or I can, I think, well, at least I have more money in my principal that I can draw down on if I really need to.
Yeah, that's the way I sort of feel about it. I think if you look at the evidence last year when they did cut rates, when they hiked rates, it did lead to a cut in spending. And when they cut rates, even though people may not have changed their payments, at some point in time people felt happier because their debt was going down faster and they started to spend more. Now it'll be the other way around, hiking rates again, and people will see their debt go down less. Therefore, they may not get that feel-good factor. But we've got the Reserve Bank is basically, I mean, this is the thing that surprised me, was that if you go back to November, they had the trim mean under rate of inflation going back to target within a reasonable, like within a year or so, it was back to target. Now they don't see the trim mean inflation rate getting back to around the target, say call it 2.5%, back to around 2.6%, not until June 2008. That's more than 2 years away. And that's despite having a higher Australian dollar, because they take the current level of the Australian dollar, and it's risen appreciably since where it was back in November. I think it's up about 7% or so. And they've also factored in now 2 more hikes from the money market assumptions. So back in November, they were assuming 1 cut, and now they're assuming 1 hike already done plus 2 more, so 3. So big turnaround in the interest rate environment, much stronger Australian dollar, and yet we've got much higher inflation forecasts. How do you square that?
Well, clearly they're very worried that the upside pressure that we had to inflation the last 6 months of 2025 is going to continue. If you back out their quarterly forecast on the trim mean, they're basically assuming that the trim mean is going to go up by about 0.8 or 0.9 percentage points in that range in the next few quarters. Whereas
which is sort of what it's been for the last 2 quarters. I think.
The last 2 quarters, yeah, but that was higher than where we thought it would be. So a more normal range would be something like a 0.6 or a 0.7. So even though in the December monthly data we saw better news on things like rents, construction costs, market services, durable goods, what I'm reading from the RBA is that they think that was more like a one-off, and they think that the trend in those areas, those problem areas of inflation, is still going to be higher, which probably goes then to the point that they revised their assumptions around potential output, which is basically where they think Australia's potential growth, actual growth is relative to its potential, and they think that our economy is growing above its potential at the moment, and that's likely to continue, basically because we have low productivity growth.
So the new set of forecasts assume, partly in response to higher than expected inflation, that the economy has less potential, we have less spare capacity, productivity is lower, obviously the labour market is tighter than what they previously had, and all those things lead to a more inflationary environment or perpetuate it for a while.
Basically that demand in the economy is exceeding supply. And Bullock didn't want to say specifically that it was public spending. She said it was both the public and the private. But clearly we've seen this big pickup in public spending in the last few years, and the government share has risen to a record share of the economy. So in our view, it's contributing more to aggregate demand than the RBA is talking about.
So if we step back a little bit, what is the CPI? The
CPI is a consumer price index, which is basically a measure of the cost of living for the everyday person.
So it's my understanding is it's based on ABS surveys, how much people spend on each item, and then they're given a weight according to their expenditure on each item. This is the average household in Australia, not for any individual household, but an average. And then it tracks the changes in the price of those items over time, and it's all combined into a weight, into an aggregate using their spending weights.
Correct.
Yeah. I think the history of them, the CPIs, was they meant to track the cost of living, which is basically what it does.
Well, they do. And they also, now the ABS have new sort of cost of living indices, like for pensioners or for different mortgage holders. So we never include the cost of your mortgage in the CPI because that's counted as an asset, but you could use rents or construction costs sort of as a proxy for that. But over time, I think it has been a fairly good proxy as to the cost of stuff that consumers are paying for. I think the problem is in the last 5 years since COVID is that the cost of essential stuff has just gone up so much more compared to everything else. And that's why consumers feel uncertain, maybe a bit unhappy based on the sentiment data, and they don't really understand, why the cost of essential stuff that they don't really want to pay for has gone up to by such a large extent.
But if we get more granular or unpack this, I hate those terms, but I'll throw them in. There's an argument that, the RBA says, well, some of the rise in inflation was temporary. I guess that's maybe travel costs or the end of some electricity rebates and so on. But then there's this demand supply thing. So it strikes me that it's a bit like if you look at demand for a good, so you're buying bananas, if suddenly everyone wants to buy a banana, there's a limited supply of bananas, then the price of bananas goes up because the demand is so strong. And this is the same thing aggregated right across the economy.
Well, that's basically their view. And I guess in the last few months worth of data that we've got from the labour market showed us that the unemployment rate is apparently at 4.1%. I mean, by this time we thought it was going to be 4.5%. So 4.1% is still the lowest that we've had, in nearly 50 years. We bottomed at 3.5% during after the pandemic. So clearly the labour market is still in a really strong shape. And I think that is sort of informing the RBA's view that we are bumping up to supply constraints at the moment. So
demand in the economy, I mean, some people listening might have studied high school economics. There's a thing called, I think it was the basic income equation in the economy, like Y, or income, equals consumer spending equals house or investment, C plus I plus G plus X minus M, where C is consumer spending. That's spending by you and me and everybody else in the economy. Then we've got investment, which is spending on housing, construction and business investment. Then we've got government, or G, which is public spending on they consume things and they employ people and they invest and so on. And then there's the foreigners, and they're X minus M, exports minus imports. But if you just focus on the first three, you've got C plus I, that's basically private demand, and then you've got G. And the argument, I guess, reading through all of this, is the level of demand in the economy has gone up. So the combination of public spending and private spending, C plus I, consumption and investment, has gone up, but there's not enough capacity in the economy to meet that demand. And so as a result, prices rise. Is that your take?
Well, it's a bit of a depressing take, really, isn't it? That the Australian economy can't grow at a high rate anymore. I mean, when I started my career 15 years ago.
That long ago? Gee, I thought I was ancient.
I remember
when I started, it used to be 3.5 or something.
Well, potential growth was always 3% here, if not even above that. So it was 1.5% population growth plus at least 1.5% for productivity growth. So the potential growth rate of the economy was 3%. And now it seems like we can only grow at 2% before we bump up to these limits.
Yeah, that's a bit depressing.
But the consumer hasn't, I mean, I wouldn't really say that consumer spending has been particularly strong. It's definitely improved in the last 6 months. But prior to that, we had real income growth that was negative for a period of time. Retail spending was not that strong. So I think it's really been the government sector, like you've been talking about this week and last, that's been adding to more demand in the economy.
Yeah. I kind of think high levels of government spending, and this has been an issue. It's not something that economists have thought up this week. It's been a debate for the last couple of years now. It really got underway, it seemed, in the latter part of last decade, and then went on steroids through the pandemic. JobKeeper is an example of that. Then it sort of ended, but then since then we've seen exploding spending on things like NDIS and aged care, healthcare, and defence has been going up a little bit as well. So it's a lot of those things are good to have. They're things the community wants, but it has led to a situation where public spending as a share of the economy, or the G component, public spending has gone from something like 22 to 23% of the economy, which it used to be in the 30 years prior to 2020, and then now it's running around 28%. And even though it sort of looks like it's topping out, the rate of growth there is slowing. It's still at a very high level. So you just have this slight pickup in consumer spending or a slight pickup in business investment, or i.e. more private spending, and then it bangs up against this very high level of public spending, and then whammo, we're at capacity constraints, and then prices go up.
But why has the government been spending so much more in recent years? Like, is it the demand from the community groups that are asking for this stuff, or like aren't there any guardrails in place that sort of constrain the level of government spending that we can have every year?
Well, we don't want to get it too political. It's a good question. If I go back 40 years ago, Hawke and
But we're not political because economists are meant to be independent.
Yeah, we're independent. And you and Marcel over there would probably say that I'm a woke lefty. My favourite show lately is Bridgerton, and that's was it DEI and steroids, I reckon, when you watch that. But it's a great show anyway. I mean, economists just have to call it as they see it. And I think
we read the tea leaves.
We read the tea leaves and look at the star signs and all this. No, but we also look at the economic data, and the economic data tells us that there has been a pickup in private spending and that government spending still remains high. And therefore, we've got inflation that's telling us maybe, just maybe, we're up against capacity constraints. So one solution to that is for a lower level of government spending to enable a pickup in private spending. Enable us to invest more in housing and invest more in factories and everything else, and consumers to consume more.
Because then you sort of contrast, this what we're talking about with the economy apparently being above capacity to profit growth for Australian businesses. And profit growth has basically been negative for 3 years in Australia.
Years. It hasn't been.
So how do you square the two? It doesn't really make sense.
You can't blame corporate Australia for causing the inflation problem or anything like that, because their profits have been going backwards.
But that's what I mean about it being, this sort of depressing situation that our economy can't even grow at high rates anymore, because even at the current rates that we're at, and profit growth is still negative. It's hard to understand how the two match up. So it has to be related to government spending.
Well, I think it does relate to government spending. A lot of it does. I think that there is the broader issue of productivity. So you can have a rise in spending, the C plus I plus G stuff, too much G, and then you got a rise in the other two, private spending, then you got a problem. The other aspect is, well, what if you expand the capacity of the economy? We focus on making it easier for builders to build homes. So rather than taking a year to put up a new house, we get it back to nine months or whatever. You've seen this basic stat that it takes 50% longer now to build a block of units or a house. So we just wind back to where we were 10 years ago. We maintain the building standards, of course. We don't want buildings falling down. But we make it easier for Australians to build homes, and we do that across the board. I mean, that to me sounds like a good thing to focus on. Or we fix up the tax system that disincentivises people, income tax rates which are too high and the thresholds kick in at levels which are too low. And we focus on all these sorts of things. And by doing that, you can actually expand supply in the economy. So you can still have government spending at higher levels, but you'd have a bigger level of supply to meet that without this inflation problem we have. I think the other aspect is that government spending, you asked, are there limits to it or guardrails? And there used to be under Hawke and Keating, and then Howard Costello, and then to some degree under the subsequent Labor government, and then the subsequent Liberal government. There were guardrails around it. Hawke and Keating used to call it the trilogy. Anyone interested in that can Google the trilogy. And that provided constraints around government spending, tax revenue and the budget deficit.
Yeah.
And I think we probably need something like that now. And the problem with public spending is that it can tend to be a little less productive than the private sector. We can debate all this ad nauseum. And there's also a danger at times that things get out of control. I think the NDIS is a great thing, but there also seems to be a lot of evidence that it's being abused. And that abuse leads to more government spending. The government has to pay for that. So where does this leave us on interest rates?
Well, if you believe the RBA's forecast, then we should be assuming at least 2 more rate hikes in the next 12 months. But I don't believe the forecast.
Oh, you think they're too negative? Too pessimistic, put it that way.
I think their inflation forecasts are too high because, in my view, they're extrapolating the last 6 months worth of data continuously into the next 12 to 18 months. And I find it hard to see that when the business surveys like NAB or the PMIs suggest that inflation's going to soften from here. The forward-looking jobs data, like vacancies and advertisements, has been flat-ish in the past few months. Wages growth is going to soften a bit. Global prices, according to our global inflation tracker, have slowed a bit as well. If you look at global food prices and commodity prices, not all commodities, of course, the metals are going crazy, but like the Chinese producer price index is still weak. So on a global front, that tells me that tradable prices should be a bit softer as well. So I guess I don't agree with their inflation forecast. I don't see how it's possible to get those high rates of growth continuously the next 4 quarters. So if we were to follow our own forecast of inflation, then I would say that it's hard to see another rate hike needed from here because I think the inflation data is going to soften.
I must admit the surprise, there's a huge divergence between the NAB, that's National Australia Bank's business survey, and the PMI and PMIs. On the one hand, PMIs are purchasing manager index surveys, again, surveys of companies, and both the output price series in those two surveys is sort of hovering around levels consistent with inflation at target. Never showed a spike that we saw in the CPI. So that was one factor again, which held me back in forecasting a hike.
And I wonder if that's more linked to market services prices rather than the administered issues that we've had.
Yeah. They don't have administered prices in the NAB survey for obvious reasons. But so our view is basically that rates will stay here for the rest of the year. But I'd have to say the risks are on the upside, given how tough the RBA was.
Yeah.
I mean, the RBA is like other economists. If you go back 6 months ago, they had a far more rosy view of things. And of course, they've had to respond to the data.
Well, it's not all doom and gloom. I mean,
It's not that bad.
They're only raising rates because they think the economy is too strong, basically.
And unemployment is still low. It's not, I can think of far worse places to be than Australia. I mean, Australia is actually doing reasonably well. And if you look at Canada and New Zealand, they've been able to get their rates down to 2%. Or even Europe. Europe has 2% cash rate and they've got 6.2% unemployment. What's New Zealand? 5.4. Canada is pushing 6. So I'd much rather what we have in Australia than what's happened in those countries.
Yeah, I agree.
And we don't have the social dysfunction that we have in the US. As we talk, they've just ended another shutdown. And they're, anyway, I won't go into the US, I'll get carried away with Donald Trump. But anyway, I think that's all we have time for. I hope everyone valued that discussion. Some explainers in there regarding inflation and interest rates. I know it's a vexed topic and does confuse a lot of people. But anyway, see you, Deanna.
See you, Shane.